Hey everyone, welcome back to InvestMind Unplugged. Today we're diving into one of the most critical parts of your financial life, your credit score. If you're ready to understand what makes up your score, why it matters, and how you can improve it, you're in the right place. Whether you want to buy a car, rent an apartment, or get the best rates on a loan, your credit score can make or break the deal. So let's break it all down and help you take control of this number. First off, what is a credit score? Simply put, it's a three-digit number that represents your credit worthiness. Credit scores range from 300 to 850, and the higher your score, the better your chances of qualifying for loans, credit cards, and other financial products with favorable terms. So why should you care about this number? Well, a good credit score opens the door to lower interest rates, higher credit limits, and even helps when you're applying for an apartment lease. On the flip side, a low score could mean limited options or higher costs on everything from car loans to insurance. Now let's get into what actually affects your credit score. There are 5 key factors you should know about. The biggest factor is your payment history, which makes up about 35% of your score. Simply put, lenders want to know if you paid your bills on time. Even one late payment can hurt, so set reminders or automate your payments if you can. Next is credit utilization, or how much of your available credit you're using. This makes up around 30% of your score. Ideally, you want to keep your credit utilization below 30%. If your total credit limit is $1,000, for instance, aim to keep your balance below $300. Length of credit history counts for about 15% of your score. The longer you've had credit, the better, as it shows lenders you have experience managing it. So if you have older credit accounts, think twice before closing them. Credit mix is next, making up 10% of your score. Lenders like to see a mix of different credit types like credit cards, auto loans, and mortgages, because it shows you can handle various forms of credit responsibly. Finally, we have new credit, which also makes up 10% of your score. Opening multiple new accounts in a short period can signal risk to lenders and temporarily lower your score, so avoid applying for too much credit at once. Every time you apply for credit, there's a hard inquiry, which could impact your score by a few points. Step 1 is to actually check your score. You can check your credit report for free once a year at annualcreditreport.com, or you can use apps that show you an estimated score. Knowing your score is the first step to improving it. Your score can vary slightly depending on the credit bureau, Experian, Equifax, or TransUnion, but the general range should be close. Step 2, pay bills on time. To start improving your score, prioritize paying bills on time. Late payments have a big impact on your score, so set up automatic payments or reminders to avoid missing due dates. Step 3, lower your credit utilization. Work on lowering your credit utilization by paying down high balances. If you're carrying a balance on multiple cards, consider focusing on the one with the highest utilization first. Step 4, keep old accounts open. Remember to keep old accounts open if possible, as closing them shortens your credit history. Of course, if you're paying high fees, closing them might make sense, but otherwise, holding on to them can help your score. Finally, avoid applying for too much credit at once. If you're shopping for a loan, try to keep inquiries within a short time frame to minimize impact on your score. Let's bust a few myths. First, checking your own credit score, known as a soft inquiry, does not hurt your score, so feel free to check it regularly to track your progress. Myth 2, carrying a balance helps my score. Carrying a balance doesn't help your score. In fact, it just means you're paying more interest. If you can, try to pay off your balance each month. Myth 3, I don't need to worry about my score until I need a loan. Building a good credit score is a long-term game, so don't wait until you're ready to buy a car or a house to think about it. Start now, and your future self will thank you. That's it for today's video on understanding and improving your credit score. Remember, a strong credit score opens doors to better financial opportunities and can save you thousands in interest over time. If you found this video helpful, please give it a thumbs up and subscribe to InvestMind Unplugged for more personal finance tips. And check out our next video, how to build your first budget in 5 easy steps to strengthen your financial foundation. Thanks for watching, and see you next time.